Yes, it's scary. You keep hearing all the headlines. All they talk about is recession, inflation. So now what? Hi, I'm Stacy Olson with the Valentini team at William Ravis Real Estate. And on my channel, I'm going to tell you everything you need to know about living on the Connecticut coast. So we've all seen the news, we've all seen the headlines. And then just this week, Bloomberg Economics released their forecast model, saying that it's a 100% certainty that the U.S. economy will fall into a recession within the next 12 months. What? And if that wasn't enough, the Fed has implemented 3 large quarter-point interest rate hikes in the last 3 meetings. And the 4th meeting is coming up in early November, and they're expected to increase it again. And on top of that, despite all these interest rate hikes, inflation ran at 8.2% in September, which was higher than expected. So now what? The Fed keeps raising interest rates in hopes of cooling the economy down, kind of like slowing your horses up a little. So now the rates are hovering around 7%. So what are potential home buyers to do? Yes, looking at a 7% interest rate can turn your stomach a little, especially knowing that a year ago they were less than half that. So you've got a couple things in your favor right now. First, due to the higher interest rates, demand is slowing. It's not going completely away, it's just slowing. So fewer buyers are looking because they're scared off by the rates. So especially around here, the homes that are going on the market are sitting a little longer than they were, let's say, 6 months to a year ago. And some are even taking price reductions. What's good about this is that this gives the buyers some negotiating power. It was pretty much non-existent throughout the pandemic home buying surge. And even though the demand is cooling somewhat, not a lot, but somewhat, it's still higher than it was in pre-pandemic levels. So homes that are on the market that are desirable and priced correctly are still selling very fast. So don't think that you have everything on your side when you're still looking. Even though the rates are high and you're still looking, you're thinking, ooh, I'm going to get a good deal because this home buyer really wants to sell their home. They'll negotiate with me. It's not always the case. Just be prepared that if it's a nice home that's been well kept in a great location and priced correctly, it's going to sell quickly, and some are still selling for over asking. So for those of you that are scared of the 7% interest rate, here are some tactics that you could utilize if you're not quite ready to get out of the game. First of all, research your area and know your local banks and their rates. I know, for example, that there is a local bank here in Connecticut that is still advertising rates in the low 5s. I know, that's right, low 5s. It's honestly the lowest rate in the country. You can save 2 whole percentage points at this point on a rate with them. So just be prepared to look outside just using your regular mortgage broker and take a look at some of your local banks because sometimes they can beat out the big guys with their rates. Another thing you can do is that if you have enough cash, which obviously isn't an option for everyone, but if you do, you should think about doing a 15-year fixed mortgage versus a 30-year. Yes, this can be very intimidating, right? Because obviously your payments are going to be a lot bigger than they were with a 30-year fixed rate. But if you can swing it, you can have your mortgage paid off in 15 years and save a boatload on interest. Another thing you can do is to get an ARM, which is an adjustable rate mortgage. Some folks are like super petrified of these mortgage products because they had a really bad reputation during the 2008 financial crisis. They were being overused and people were not vetted. And so yes, some people are like, I don't want to go near an ARM. But they are really great options for people as long as you stay on top of them. So basically how it works is, for example, if it's a 5-1 ARM, then you will have one flat rate for 5 years. And then at the time of the 6th year, you will just get the market rate. And generally they have caps on how fast it can increase. Like it can only go up 2 percentage points from the rate you had before or whatever. They all have different options. But it is a viable product for people that will be willing to sacrifice to get that lower rate. There are several different types of ARMs. You can do the 3-1, the 5-1, the 7-1, and the 10-1. And they all relatively work the same. But like I said earlier, you really just need to stay on top of them. Because let's say in the middle of your 10-1 ARM, the 30-year fixed rate drops, 2 percentage points, and that's lower than the rate that you currently have for your ARM, then you can refinance your home to that lower rate. Because as we like to say in the business, you marry the house, but you date the rate. So as long as you keep your eye on those rates, you can always refinance at a future time. You can reach out to your local mortgage broker and ask them if you can refinance. There are obviously some limitations. You have to have some equity in the home, but like I said, you're not locked into that rate for the remainder of however long you own that home. Another thing people have been looking at are discount points. Some lenders will allow you to pay down the rate by a certain percentage if you pay 1% cash up front to bring down the rate. So, for example, a lender could offer a 0.125 reduction in your interest rate if you pay for a discount point. So what's a discount point? One discount point basically equals 1% of whatever the home value is that you're purchasing. So that would mean if you were purchasing a $500,000 home, that would be $5,000 that you would pay to reduce your mortgage rate by 0.125%. And this additional $5,000 is paid at the closing. Basically what you're doing is that you're paying for interest up front. So that's how the lenders are able to offer this to you. It's known as prepaid interest. The one interesting tactic that some sellers are using today is that they are offering to pay discount points for their buyers. So this is how that scenario would unfold. Let's say a seller's home is on the market for $570,000, but the buyer is only willing to pay $540,000 for it. So the buyer offers the $540,000, but the seller is like, no, I really want to sell my home for $570,000. I'm going to offer to pay for 3 discount points for you if you agree to pay full price. And you might think, who would do that? Why would you want to pay more money? Well, in some instances, it actually makes sense for both the buyer and the seller. So let's continue on with my example. So let's assume the buyer goes ahead with their offer of $540,000 and they had a rate of about 6.875, which is kind of in the area of where the rates are now. They have 25% down, and with a 30-year fixed mortgage, their payment would be about $2,661. That's every month, but that doesn't include taxes and insurance. But on the flip side, if they pay the full $570,000 with the same 25% down, but with the 3 discount points paid by the seller, their rate goes down to 6%. So now their monthly payment is $2,563. I know, it's crazy. They paid more for their house, but their payment is lower. They're actually saving about $97 a month by doing it this way, which equates to about $1,168 a year. So the buyer is benefiting for sure, but the seller is as well, because even though they got the $570,000 asking price, once you remove the amount they actually paid for the discount points, which would be about $17,000, they're still netting $553,000, which is higher than the $540,000 that the buyer originally offered. I mean, this is a great idea. Everybody wins in this scenario. So people are coming up with great ways to entice others to buy their homes, and buyers should be willing to look at all different types of options in this kind of market. Because yes, 7% seems so high, but in the grand scheme of things over the last 40 years, 7% isn't terrible. It's just we've been so used to these crazy low rates over the last few years, but those were unsustainable. Nobody really can predict where rates will go in the future, but as of right now, it does look pretty clear that the Fed will be raising the rates again in a couple weeks at the beginning of November. And with Bloomberg Economics saying that they see a 100% certainty of a recession in the next year, I think it's safe to say that you need to be open to a lot of different options if you're still in the market looking for a home. And if you need help, if you're in this area and you'd like to buy your home or sell your home and upgrade or downgrade, please give me a call. You can reach out to me on my YouTube channel. I have my email on my channel, my phone number. So I'm always here to help anyone that needs it. So if the interest rates haven't scared you and you're still looking for homes in the area, have you ever thought about lordship? Check out this video where I talk about all the amazing things they have going on down there and how beautiful the beaches are. And if you like my videos, please hit the subscribe and the like buttons. And until next week, have a great day.